Good afternoon, traders. Mark here from the day trading room. Time is 25 to 5 London time in the afternoon on a Sunday, warm but wet Sunday afternoon here. And just reviewing the week's trades, my own trades, good points, bad points, looking at the market, looking at the levels, looking at what's been working, what hasn't been working, what to look out for next week. Keeping my eye definitely on that quarter past eight, 8 o'clock to quarter past eight reversal time, or not necessarily reversal, but more money flowing into the market. Here we are here. I think we've had it 3 or 4 days in a row now. I did mention in the last video. But yeah, that's really worth watching next week. And yeah, just following on really from the breakout video of how just got to be so careful with trading breakouts, and it's just, as I said, not something I like doing at all. I like being positioned for the breakout. By the way, if you haven't seen the video, go and have a look. Make more sense to you this video. I don't like trading breakouts unless it's very special circumstances. I like to be positioned, or if I can't get positioned, or if perhaps I don't have a clear opinion or feeling or tape read that the market is going to break that level, then I'll wait for it to break and take a subsequent pullback. There will always be an opportunity. If a market breaks solidly, it's very unlikely that it will just hammer down without pulling back and doing another leg. Very unlikely. Most of the time you get the hammer down, the pause, then you'll get the second leg, perhaps a third leg, fourth leg, whatever. But very unlikely you're just going to get a push through and a snap back. You may do, but then again, if you're taking that trade, how are you going to manage it from a point of view of the breakout when you get that? So I'm just looking at Friday afternoon here, or Friday evening, wherever you are in the world. And this was the 11,000 level. I think it was about 11,000, perhaps a little bit higher. It was around about here anyway, 11,000. And this was the prior day's low, the dotted red. And just looking as we go into the last hour of the last month, last day in the last month of the quarter, how the market behaved and what really looking at and how to trade these sort of things. And as I said before, as I have said before in some videos, there are some times when certain one candles give you the biggest clue you need to know. And for me, the candle which gave the game away as to the potential or the likely move for the last 7 minutes was this one. This little green one here. Now, why is that? Now, I'll explain my thought process behind that. Now, really, we had the 11,000 here. We had the prior day's lows. A lot of support here. Great support. If you were on that bounce, hats off to you. Great read. Same here. If you're on that, great read. But we probed. Okay, now I'm going to use the drawing pen here. Let's imagine that's the support. We've come down, and we know we poke through support quite often, guys. That's the name of the game. If we're buying a support, we're always either looking at our tape from that point all the way through to a level that we may predetermine, or whatever we think is acceptable still to do our buying. But that wasn't a trade that I took. It wasn't the trade that I want to talk about. I want to talk about when you get that V-shaped bottom, really aggressive buying like we did there. Now, get a pullback, fine. This is the point where you need to be laser focused on your tape or on your short time frame charts, whatever you use to trigger your entry, because this is the point where supply demand imbalance or balance is going to shift from one way to the other. Now, why is that point so crucial? Well, if you think what's happened, you've had a drive lower, a lot of sellers getting excited, pushing the market lower. All of a sudden now, bang, big reversal off a key level, back up just over 11,000. 11,000 was here, cash I'm talking about, by the way. So just over 11,000, pushing back under. Now put yourself in the shoes of both players, long and short. Long are quite pleased because that's quite an aggressive strong bounce. Sellers aren't too happy with it. Breakout sellers are hurting because they're offside now by 50 points or so. But at the end of the day, they got the wind behind them, and any sellers from the earlier on in the day are in the money. So why is that candle so important? That candle is so important, or that minute, that 30 seconds, whatever you want to look at, is so important, because from there people are waiting with bated breath. Buyers are thinking, okay, we've had a good strong bounce off the bottom now. If we can push up, great, I'm happy. And sellers are going to start liquidating. Shorts are going to think perhaps that's the end of the move. I've got a nice move out of it. Those that are trapped there are going to think, oh dear, I've really sold the bottom here. They're going to come out of it. There's a lot of reasons for both sides to trade, and that's what moves markets. So similarly, let's look at it again. If it pushes down here, same thing, pushes back up, pull back, and then does this, who's panicking here? Buyers who bought that push up aren't happy with that at all. They're looking to liquidate. They're thinking, oh no, it's the end of the month, it's the end of the quarter, end of the day. Oh, I haven't got long to go, I'm out of here. And sellers, getting more aggressive, pushing it to the lows, and just waiting for that market to run. It's just the supply demand imbalance has shifted. So that's why it's just so important there. Putting yourself in the shoes. Sellers relieved, they don't need to buy, and any more longer time frame sellers just using that little pop up there to get their finish off their orders. So yeah, always look out for the telltale candle. Always look out for the candle that means the most to most people. Odd way of saying it, but if that makes sense, just have a think. Put yourself in the shoes of the buyers, the sellers, etc., etc. Have a great week next week. Good trading, guys. Manage the risk. So important, risk management. Have a think about the mental preparation, preparing for the day, and the mental side of the trading game. And just look and see what's been working, what hasn't been working. In for an interesting week, excuse me. So hopefully we'll have some good opportunities. Anyway, take care, guys. Back with another video later in the week.